I'm Alan Kenny, Editorial Director with REIT.com, and we're in San Francisco for REITWorld 2013. Joining me is Marty Cicco, Senior Managing Director with Evercore Partners. So Marty, big story this year in the REIT market has been IPOs. Are we going to see that kind of momentum sustained in 2014?
You know, the IPO market continually goes in and out, and at the end of the day, it's not always just the IPO market, it's what product is being brought to the market. And you know, to the extent that there are companies, Hilton is in the queue now, has filed a registration statement. For big liquid companies, there's clearly a market out there.
Those Blackstone IPOs that you mentioned, where Blackstone's maintained a controlling interest after the company goes public, how do you see the market reacting to those?
Well, so far, I mean, the completion of Brixmor speaks for itself. That the transaction got done, priced in the middle of the range. Traded very well at right after the IPO, so that it validated the price. But it's clear to the market that Blackstone has an 80+% ownership stake in that company. It does present a bit of an overhang in the stock, but it's not uncommon in lots of corporate transactions. Twitter just went public; very small percentage of it was sold. But as far as the governance that Blackstone put forward, I think the market understood it, accepted it, and over time they will probably exit their position. But I think the market has a feel for what their ownership is. They'll monitor it, and I think at the near term, it's a plus to have them have such an ownership position.
So next year, do you see a lot of M&A? Are there any potential sectors that you think might be more ripe for that kind of activity?
Well, there's certainly been a lot in the net lease sector, Alan. Listen, M&A is again something that's relatively cyclical, but I'd make two or three observations. One, particularly in the net lease side, was really the outgrowth of a number of the private REITs that had been out there that faced a point in their lifespan where they were either forced to list, and candidly, as opposed to listing, merger becomes an opportunity for those companies. Although it amazes me at times how much money was raised in that sector over the last 5 to 10 years, you have a lot of assets there that need liquidity. And as part of the charter, had to get liquidity, and candidly, I think that's what spurred the M&A market. But M&A is also driven by, particularly coming out of the crisis, you have haves and have-nots in the various REIT sectors. But real M&A makes sense to the extent there's a multiple discrepancy, either a balance sheet discrepancy. And I guess the final point I'd make to you about the M&A business has a lot to do with people. The real estate industry, by and large, is a mature industry. There are economies of scale, and that does prompt merger activity. But the other factor is the social side of the issues of one management team being willing to make a deal with another management team, where you put them together, and sometimes they're being driven more by CEOs and boards.
All right, thanks a lot for the update, Marty.
Alan, it's always a pleasure.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.